Hello everyone, George DeSantis here with the look at the market for the week ending April 21st, 2017. Before we get into the charts, etc., let's take a look at the disclaimer. Trading and investing has large potential rewards and large potential risks. This video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice. I am not an investment advisor. Let's take a look at some charts. So here's that chart of the S&P 500. We looked at it last week, showing the regression channel of the S&P. And this is about a 3-month chart. It's a 3-month chart. And so what we can see here is that the market is, according to this, the market is still oversold. We are now at the 14% line level, close to the 10% line. And typically, whenever we get to that 10% line, we tend to rally from it. If we look at a 6-month chart, you would see that you could see a long period of that. So we don't know how soon this thing is going to rally from here, but it looks as though we're setting up for a rally, finding support here. Let's take a look at the monthly chart of the S&P. So on this monthly chart of the S&P 500, we can see clearly that we have an uptrend. We closed above the upper Bollinger Band. We saw that last week, a couple of weeks ago, and we pulled back a bit. We saw that also on the previous chart, where we got to the bottom of the regression channel. We'll see on the weekly chart that it seems as though we're finding support somewhere here. So the Kalman filter, this yellow line, is still above the instantaneous trend line, indicating the trend is still up, of course. Parabolic, that yellow dot, is still below the most recent bar, indicating there is no reversal of that uptrend at this time. MACD continues to trend up. There is no divergence. We have a little bit of a pullback here recently, but no divergence. And at the bottom of the chart, Elder Force Index became very overbought, and it's pulling back a bit. So let's take a look at a weekly chart. Here's a weekly chart of the S&P 500, and it's what I call the 930 chart, because what I'm showing here is the 9 EMA, the 30 weighted moving average, and the 4 exponential moving average, EMA. And what happened is that on March 1st, we made a high, 2400, and we pulled back, we regressed to the mean. The mean being the 30 weighted moving average. Okay, so now what we have is the 4 exponential moving average just in line with the 9 EMA. We also have an ABCD triangle, and I calculated a target of 2449. Assuming that this gets resolved to the upside, this symmetrical triangle, and it ought to, because after an uptrend, at the end of an uptrend like this, these triangles usually are continuation patterns, and they get resolved to the upside. So if we get that again, we're likely to go up to 2449 on the S&P. So we keep that in mind. Also, we can see that RSI 12 is hovering around the 60% line. So the trend is still indicated up. And since the 9 is above the 30, the trend is up. The 4 is above the 9, and the 9 is above the 30. So we're in an uptrend. The Williams pro-buying indicator is also above the 0 line. So it seems to indicate that that trend is still intact, the uptrend, with a regression, uptrend with a regression. Now the percent R, we are bouncing off the 80% line, it seems. And to go back up here once more before we leave this chart, we also have a bullish harami. because we had this bearish candlestick here, and now we had this bullish candlestick, the body of which is totally engulfed by the body of this one, which is called a bullish harami. So we have a symmetrical triangle at the top of an uptrend, we have a bullish harami, and we are likely to go higher from here because we seem to be finding support at this 30 weighted moving average, or as we'll see on another chart, the instantaneous trend line. Let's move on to a daily chart. Here's a daily chart of the S&P 500. A couple of things. We can see here that there is a symmetrical triangle here as well, A, B, C, D triangle, and the top of the apex of this triangle is approaching what, 2360, this line here. So I calculated 24, I think 2449 as the measured move, the target for the measured move. We also can see a bullish harami here. This body is completely engulfed by this body of this candle. So, and also MACD bears a losing strength. You can see that since we made this bottom here at the end of March, close to the end of March, the 27th, the bears are much stronger here than they were over here. So bears are losing strength, and I think this market is looking to go higher. Let's take a look at something else. And here's a weekly chart of the NASDAQ composite. First thing to note is that the Kalman filter, the yellow line, trend line, is above the instantaneous trend line, indicating the trend is up. We also have the parabolic below the most recent bar, last two bars in fact. Therefore, there is no indication to reverse the uptrend. We have a nice bullish bar here last week. And we find that the Kalman filter is trending up a little bit as of last week. So that tells us the trend is up. And at the middle of the chart here, we can see RSI 12 came back a bit to the 60% line, but last week, of course, we went up, and so we bumped off that 60% line. The RSI 12 indicator is really a good measure of the trend. And MACD, although it's pulled back a bit, there is no divergence. So we shouldn't be as concerned about this pullback here as if we had a divergence. There is no divergence. And let's take a look at the daily chart of the NASDAQ. On the daily chart of the NASDAQ composite, what we can see is that, first of all, the Kalman filter just crossed back above the instantaneous trend line, indicating that we now have an uptrend. In addition to that, the parabolic, which was above these bars and was hit here, is now below the most recent bar, which of course was Friday's bar. So the parabolic is indicating that we now have a reversal of this downtrend. So we now have a reversal to an uptrend. The 9 is now crossing above the instantaneous trend line, as well as the Kalman filter. So that augurs well for the future, especially if you're bullish, if you own stocks like many of us do. The Jerry Appel's sum of the rate of change indicator hasn't really given us a signal to buy the index yet, because it's still below the 4% line. So I'm not buying the Qs or whatever at this time. But as soon as it crosses above here on the daily chart, that would be a signal to buy it. Now the MACD, just as we saw in the S&P, MACD is trending up. Bears are getting weaker and weaker. In fact, MACD is now in positive territory, in bullish territory, because it's 0.58 now, just slightly above the zero line. Elder Force Index trended up from this very low level, and it's now at about 40. So 36.80. All right, so the daily chart is also riding the upper Bollinger Band coming out of, I guess you could call this a squeeze with some stretch. But it's riding the upper Bollinger Band, which looks good for the bullish position. Let's take a look at something else. Here's a quick look at the chart of the the daily chart of the S&P with the VIX, the volatility index indicator here. And we can see that since it made this high, it pulled back to, let's see, 14.63. So it's not quite at 15 anymore. And so we don't have the same level of fear in the market. We do have this symmetrical triangle. You could see it here, A, B, C, D. Let's take a look at something. And here's a look at SSO, which is the ETF that I trade on the S&P. We can see that I usually am interested on this chart. I'm interested in the CCI indicator down here, the Commodity Channel Index indicator. As long as it stays above 0, we have some support, according to this indicator here, for the uptrend being in place. And of course, we don't need to go through this. It's the same as the S&P. We can see that we have this bullish Harami, etc. And the relationship of the Kalman filter to the instantaneous trend line, it's above it, uptrend. Let's take a look at something else. And before we go to another chart, let me just quickly summarize what we've looked at. The monthly chart of the S&P is, of course, trending up. Long-term chart, and it looks pretty much so. The weekly chart of the S&P is trending up. There's a bullish Harami, a symmetrical triangle with a measured target move of 24.49. CCI is trending up. The weekly chart of the NASDAQ, it's now in the value zone, which allows us to buy it. And it's also trending up. The daily chart of the S&P has a symmetrical triangle as well, a bullish Harami, and of course it's hovering around the 2350 level. It's closed slightly below it last week, but we are likely to trend up from there, given some of the other things that we've seen. And the daily chart of the NASDAQ, the Kalman filter just crossed back above the instantaneous trend line, indicating that the trend has switched to an uptrend now. Of course, there's a lot of overhead resistance, but let's hope we can get, we have to get past that 2400 level, which is the previous high on the S&P, before we can see a move perhaps to the 2449 level. So let's take a look at the impulse charts now. And here's the daily chart. With the impulse bars, you can see that the current bar is blue, allows us to go long or short. So we're sort of at a critical juncture here. And my guess is that we're going to be going higher. Since, you know, we have a higher low here, where we need to break this high here, where I got my cursor. And that would give us more confidence that this trend is now reversing on the daily chart. Okay, so let's take a look at another one. And here's a chart of the NYSE showing us the advanced decline line. And you can clearly see that since we started this uptrend back in March, what was it? Early March of 2016, I believe it is. Yeah, we still have this nice uptrend. So that's all for this week. Have a nice weekend, and we hope to do this again next week. Have a very successful week. When I send the email, I will mention some of the things that I own and so on. So have a wonderful week. Bye-bye.